world and the planet, and there is talk of all sorts of things, but there is a potential for a key inflection point here. So last time we spoke to you on the YouTube channel, we said we still maintain a fear, our first scenario, and I'll show you how we model that. Actually, it might be a good idea. I did a wee diagram. How we had 5 scenarios of what's happening, technical scenarios that could happen on Bitcoin. We had 5. There's probably infinite, but the main 5 probably ones add up to, let's say, 90% of all the possible things technically in terms of the chart that could happen. That's kind of what I'm showing you. Our first scenario that we were talking about at our last YouTube is very much was the red, which is for bear concern. So either soft, flat or down. And that scenario relied on the possibility of a major Fed policy error. In other words, they are talking about tightening in an environment that's become so sensitive to tiny changes in debt prices. American mortgages already going a lot more, all of this. And they had to talk tough because inflation is mooning. Inflation is really strong. People are having to pay more. Guess what? That rising oil price, courtesy of the war in Ukraine and Russia and many other places and supply chain, all the other things they've done, only makes inflation numbers worse, by the way. So with all of those things happening, the likelihood of a potential deflationary crash because they start tightening and the world just goes, huh, and the stock market falls, people cancel jobs, they don't hire, they fire, people lose work, they stop spending, and that whole deflationary aspect then plays out, whoosh, a wash to the downside. That was the scenario 1 that we put ahead of our very close bullish other scenario, which was scenario 2. But let's finish with scenario 1. Technically, we had the marginally higher high of 64 and then the 69 top. We don't like that structure too much. Was it going to form a rising wedge? No, it didn't. It's already flattened out. Came so low that it no longer had a squeezy in it. So that ruled out the rising wedge climb. So a lot of the possible bullish ways we could have fixed that technical marginally higher high, the 64 and the 69, were getting eliminated. So we didn't like that. The lack of volume recently at the lows, that's what we're highlighting. The lack of volume at the lows was also a concern. So we were worrying about, hey, if this is supposed to be a bottom, where's all the buying power? People should be just going, yeah, give me some, it's cheap, I'll take it. None was showing up. So bull structure failures. We still get the guys from something we said way back in September in an environment where the market is clearly slowing down. You said 84 in Christmas turkey. We did. We own it. And guess what? The structure failed, and it failed long ago. And we still said so in the previous year that it failed, and that's why you're not getting it. And that is negative feedback for the bull case. So that is why scenario 1, which is saying, could it be a bear case? Now there's that murky gray ground between an out-and-out firm bull case, and I'm talking about on a 4-hourly to daily time frame. So what's it going to do in the next week and month, rather than in the next 3 years, where we all expect it to be higher. So not the super macro bull. We're talking about the short, medium term time frame. What was it going to do? Next, bull structure failures is generally a bearish warning. So we had the 84, but that wasn't going to happen because it ran that stop. It was a little bit ascending. Everyone was chasing it a bit too soon, and then they fizzled. And we started to get this Fed policy. We started to get the inflation. That was scenario 1. That is what we've been presenting to you as our dominant bias. Now what's happening is the possibility or scope for scenario 2, which was admittedly a fairly close, but still, I would still say with the power of the Fed and the inflation narrative that was being so dominant, which is likely to be very bad for Bitcoin because they'll commit an error. I say inflation isn't bad for Bitcoin. The Fed's likely response, if they are really being motivated to keep tightening and taking out money out of the system and raising rates, will lead to a policy error. That policy error, bad for Bitcoin. Loss of jobs, loss of discretionary income, forced sellers to pay rent, food, and everything else. crypto kiddies have to get out, sell their skateboard, sell their BTC so that they can go and buy bubblegum and food and everything else they want to buy. So scenario 2 was the Bitcoin NASDAQ. Now we've shown you that, and we've shown technically the BTC NDX, and we will go to it again soon. But let's just work with this diagram until everyone understood. And I'm only covering the first 2. The others were well back. These were the front runners of the pack. And we gave Fed the spotted jersey. We're saying you're king of the mountain at the moment with the red dots. But this could be potentially changing because something happened that we suggested was one of the ways that Bitcoin could fix our bear bias. Something happened, and I will play 15 seconds for you that will remind you of it in our previous video. What else is happening? Negative borrowing rate is quite interesting. It's not a chart-specific thing, but is a crypto on-chain analysis thing. You should follow the good guys at look into Bitcoin. They put me onto it and they update me regularly on that. Negative. It's gone negative, the borrowing rate. That means more people are short. So it starts to become a crowded trade, expecting further down. That starts to be bullish. We are still crypto fear and greed index on the lower half side, which is fear. But it's not extreme fear. See that, number 39? It's on the fear side, but it's come off lows. Retail will be late and slow generally. So if they're still in fear, sometimes it can mean that the turn is still in. They are playing and trading and investing for what's just recently happened to them. On the downside, they're still in pain a little bit. So back to our whiteboard. Negative borrowers rate, impulsive recent days. So let's just play those 20 seconds that we gave you last week when I was in my other piece of camo. What were we saying? So here it goes. And get, that's Vladimir Putin just wanting to check in with me there. Tell Vlad I'll speak to him later. But he can proceed with the CBDC thing I was talking about. Anyway, so the W bottom to the side over there, that could be a scenario where you squeeze higher. And ideally for that, you want to go up to a very similar level. Very similar. It doesn't have to be exact to the penny. A very similar level. You'll also note there was, this broadening structure with a bit of a flat bottom there. That was a key point that you broke. So there is a bit of a 46.5, just shy of the 47.5 level going on, and that is how you would do it. You'd probably have a small rest, and then you could work your way up. That is how Bitcoin could correct. So I'm giving you a scenario for how it could fix its price behavior overall structure. I'm just going to say to you, that's probably one of very... That's right, that was the scenario. So we were saying the only way that you can go back bullish. So the key element about scenario casting, and this is actually an example of what we do it in the community. So we have multiple possibilities that are existing, like on this whiteboard. And sometimes other scenarios move on up and go forward. And we define criteria for when that might possibly happen. And the criteria for it possibly happening was you have to go impulsively up to roughly the W bottom neckline, W bottom in the blue that you just saw on the YouTube that we just watched. If you do so fast and impulsively and then pause at that area and potentially then do a dip back down, you could in fact be giving us our W with a later upside break to come. And that is one of the technical, the most obvious, and it's one of quite of very few actually. I don't have a lot of examples in way this fixes it, but it did do that very subsequently after our scenario. So if I just dip back where you can see that chart, we were still at the low echelons. What has Bitcoin done since? Well, it did exactly that. It did exactly that. Let's stay with the Bitcoin chart, shall we? Here you go. You see that line in the orange box area, that blue line? It went impulsively up, and it went up to where we wanted it to go, 44,250. We didn't want it to overshoot. That would have set up the bear flag scenario where it could have then come back. We wanted it to start playing to a level, and that's exactly what Bitcoin did. So we always say, at what basis could we be wrong, and what does something do that will move the scenario to the more bullish potential scenario up into pole position over scenario 1, and Bitcoin shortly after that, YouTube, did exactly that. So here we have a scenario where you have returned to the 44,250, nice and strong. So you have not made a significantly lower low, and you failed at this level over here. Let's grab the draw tool. You failed to make a new low there with respect to that over there. So what have you had? You're squaring up against a legacy piece of, call it resistance if you want. It was just run, as all key levels of significance should be, but clearly a technical sticking point. So we are coming back up, so we are knocking more on the ceiling of a level rather than down below. We are knocking more on the ceiling of a level rather than down below. So that is one key point that I wanted to highlight that is potentially bullish and is pointing to a possible W bottom return to the reverse side. And that was one of the few scenarios that Bitcoin, that had painted itself in a bit of a corner in how many ways do I fix this, had done. And it delivered the one it needed. It needed 21 to win the hand. It pulled the jack and the queen, and up, guess what? It's there. It's back in the business for it. So it's our opinion that short term, and this is the key issue you have with these two scenarios, is that the original fundamental, not technical, but the fundamental concerns regarding the scenario, what was the scenario 1, the red case, rather than the green case, the bear case rather than the bullish one, is that the Fed policy error can still occur. Tomorrow, live trading day with us, major data coming out. Major data coming out. It could be a triggering event, guys. It could be a triggering event tomorrow. Major data coming out. US labor. Why is it important? How does it dovetail into this whole inflation narrative? It's important, and it dovetails in the inflation narrative because if lots of people are being recruited and their average wages are going up, uppity, uppity, up, it is highly potentially inflationary. More people having more money. US economy super strong. Don't believe it personally, but it might have at the statistics level that appearance. Guess what happens? It puts pressure back on them to increase rates. Initially, Bitcoin gets a bump, possibly, but later the reaction of the Fed to that on an already higher. Remember, the oil prices now traded up to 116, 114 on WTI. Those prices still have to feed into future inflation data yet to come. The inflation data you've been getting is all sub 100. It's all been at the 80s, mid 80s, early 90s. That data pulled through. You've now got that new oil data to come in. So if you think the inflation threat has gone, it's just been put on the back burner. The Fed has been bought a bit of time for doing what they should be doing, reduce the stimulus, up the rates, and bear in mind March is a rate expected rate hike. It's almost assured that you'll get at least a quarter point. That is going to be coming in as well. It's going to refocus minds back. Everybody has gone war children. The Ukraine-Russia narrative has stormed to the fore, and some even suggested for a little bit, hey, we may need to provide dollars in lieu of this threats to the financial system, kicking Russia out of SWIFT, all these other things, and a little bit of fear. We may have to provide dollars. Bloomberg, our friends at Bloomberg, we may need to provide. The Fed may need to provide dollars. What that actually is buying them some slack for not tightening as quick. So it's kind of trying to, hey, all of a sudden this narrative has popped up that is going to save the Fed from having to move too fast until the inflation data starts coming on. But that genie hasn't gone away. So what do you do when you have two potentially powerful scenarios that are both quite close, and the one gets heated up and then the other one gets heated up? You're going to have an indifferent market. If it's going to be a bull market, you could get regular headwinds of it. I don't assess you're going to have an absolute ripper and we'll be trading through new highs in a month, 2 months, or 3. I think it'll be a little bit more stop-start. If you observed, let's go back to the charts, what happened with gold and silver, and we were incorrect on gold. It popped to the upside, so the war premium worked on gold, but it worked on gold in an environment that the dollar was getting stronger, and we have been accurate on that. The dollar has been going up, but here's the good news for Bitcoin. the dollar looks a little tired. It looks about ready to have a first rest, and it's made key targets. So, dollar strength has been bad for Bitcoin consistently. That's not an incidental coincidence. It should be obvious. It's a pair, one strength, but it's been doubly bad because what's been good for the dollar is fear, and people have been forced out of crypto, which is deemed as high risk, etc., etc. So there's a double swinger because people will get out of Bitcoin into dollars as well. This channel has, this particular chart is very close to making that first target. I'm just going to fatten that line up a little bit just so that you can spot it. It's very close to competing, plus you're popping out of a rising wedge. One of these, not a triangle, a rising wedge. Both sides pointing up, just the rate of ascent is different. It's important you learn that, by the way. You will learn a lot with us. Go to themarketsniper.com and feel free to book a call, or even better, for a chance to try what it's like to have a look at trades and markets tomorrow for the simple cost of $197, an hour and a half of traditional markets, which these topics will be covered, which are still pertinent for you, Mr. Crypto Trader, and then an hour and a half of Bitcoin and all the other key token analysis. So what's happening is dollar's getting a tad close to targets and is getting a little tired. Have a look, another way of looking at this dollar index is also to have a look at the Euro USD. We called a bear on the Euro USD a long time ago. Around here, we were selling at the shoulder. We said weak shoulder, head and shoulder, down to 110 at the time, 118.6 when we called it. The neckline we drew at 117, it was run, you got your rally back, you had your spiller, quite a thriller, you had a broadening structure, and you've just run the Euro USD low. Now, it's our opinion. In time, that will go lower still. But after running a key target, it's called progress decay period. There's natural geometry to charts. You've just achieved something, you rest. After you've run a marathon, you don't go and do a couple of 100-meter sprints straight off. You collapse in a heap for a bit and you sit the hell down. And you grab some water, you drink, and the last thing you do is anything high energy. That's kind of what happens when you make a target. It needs to react and it goes the other way. It does the other thing. So you get a little bit of a bid coming back. This could run a little further, but I expect after a while, remember, the Fed and all the manipulators and master puppeteers hate disorderly markets because it brings unexpected consequences, sees all sorts of behavior going on. Suddenly all the Germans selling all their euros for dollars, starts a stampede and a panic. The whole thing collapses before they're ready to pull it all down. They want it on their time, not on yours. So what happens? A little bit of a bid back up, after a geometric technical target has been met. That was a great risk reward, by the way. On the traditional markets, you could have been in it too. Go check our Euro Swiss franc chart, which I'll show you ever so quickly because you're crypto guys and you don't want to hear it. That is called a spiller. It is an absolute spiller. It's a proper puke. And we've been on this one for a long time and we've called one of the biggest. So this is happening. Now, if the euro gets a bit of a rest because this is deemed too disorderly, which I think will come, the dollar has to back off a little bit. And it's making key targets. So in the next days or two, and we've got data tomorrow, which you can be part of watching and participating with us on the link that's being shared right now. In fact, you can get 3 visits for 3 months for the price of 2. If you enjoy, you can have a try before you buy, experience what we do, how we talk, what we discuss, and what trades potentially materialize that. See if your understanding of the market and what to do next gets any better. Yep. So with that in mind, if the euro starts to get a bit bid and the dollar backs off, it's supportive for our main boy, Bitcoin. So you're saying, yep, thanks for taking us back to crypto, given it's a crypto channel. Yes, indeed. But you need to understand what's going on in the general world as a whole. BTC Euro, don't forget, we watch all the crosses. It's already made a marginally higher high to its previous high. So in Dow theory, it's gone a little higher and a little lower. Yes, it's selling a bit off today because Bitcoin's off generally. The dollar's firm. We've had a bit of it. But this is showing a greater degree of upward. That was a single candle run from the 33.6 all the way up to just about 40,000 euros. We're looking at BTC Euro now. I know most of you never look at that chart. Leave it to me to do it for you. But this just illustrates that on the euro currency, you've already made a higher high. On the dollar, we are squaring up. We could wind up. We could even get an HVF. There's a scenario for HVF as well, now that you've made that big move up. I will detail that on the live trading day tomorrow, how that will be and what the targets will be. Come on board and watch. So this is why the FX markets matter. This is why the debt markets matter. And this is why what's going on with the Fed can't be written off. Bigger cycles in the macro markets can kill your crypto view. And we've seen that. The dominance of the bigger cycles, the sudden fear, the sudden inflation looming, that 7 trillion that was printed, it creates cause and effect, and it will dominate what is actually a very small market. You're thinking, but Bitcoin's over 1 trillion, and the total is 2 trillion. Nothing markets in comparison to the debt and the FX markets. Nothing markets, guys. Even though you think it's the biggest ocean you've ever seen, it's a nothing market in comparison. Yes, we can make great profits for us as minnows in this big ocean, but understand there are even bigger games going on and they dominate. And sometimes if they have a fight at their party, it spills into your back garden. And that's what's happened. Good, good, good. So that's Bitcoin. I wanted to show also the Bitcoin dominance we highlighted. So what's happened so far is that dominance has gone up on Bitcoin, on a stronger Bitcoin. So what might we be suggesting that people could do? You could start accumulating out of stables, those that have had a defensive position since 52,500, mind you. So you've saved a lot of drama, a lot of cost, and a lot of pushback, even if you're buying at 41,500 later today, and maybe you'll get a tad cheaper. Limit orders are your friend. You can reaccumulate a bit of pot for 10 grand less than you should have got out when we started to say defense, be in stables. So that is still a good call, even though you're not buying the bottom. Forget getting the absolute low. Forget getting the absolute low. You want to see some degree of momentum and confirmation of certain things coming your way. That spike in dominance that was led by that surge on the Bitcoin over the last 2 days, which was literally what we said. It has to do the following to even have a chance to come back into the game. It did it. It performed. It pulled the genie out of the bag, and it's led to a surge in the dominance that sees this channel continue up. Remember in that video, and go watch it again, I did a deep dive on the Bitcoin dominance behavior, and that a falling wedge could lead to an upside bump in Bitcoin. This means more fear on store of value, less interest in the VC exponential tech metaverse game, where we could see NASDAQ coming off a little bit still relative to crypto, more interest in Bitcoin, who's seen as the branded store of digital value. And that's why we're also watching gold for you, and gold actually broke to the upside, and gold has an upside target. We don't want bad things for gold as crypto people. Despite what antagonism some people and Peter Schiff have been able to cultivate, we actually want the anti-fiat to do well. Let's talk about gold. Let's bring him in and show you how he's performed. Again, there was a possibility you might have had a little bit of a deflationary effect with this interest rates talk. It hasn't materialized. And in actual fact, you got a war instead. What does that mean? Well, I'll show you what that means. You've got an upside break instead of a potential downside, and that's running to 2057. That's not very far off, guys. That is not very far off where it was last time at its biggest high. So you're probably going to get a close to similar high, could get after that a little bit of a double top and deflation. This is why don't lose your heads about going into Bitcoin. Don't get leveraged and go crazy. All I'm saying is maybe put some of your blue pot, unleveraged holdings back on if you were defensive at that point. This is non-advisory. It's what I will potentially do and may already be in the process of doing, and our community members. You can find out a lot more. If we were to get an HVF, A, we would add more of our blue pot, and B, if it remains to be giving us good confidence it's upside, we might consider, only if all the criteria are met, a small minor leverage first set up in a new trend, which may actually overperform. That could give a surge. In that environment, I would expect dollar to be coming off and relief for euro. Remember, they need it. They need it. Their gas prices in Euroland are through the roof, and the cost of gas is going up higher and higher and higher. And guess who they have to buy it from? Their pals that they're busy sanctioning into the dirt, everybody they're cursing, they've got to buy it from the person they most hate, Mr. Russia. That's right. Okay, so with gold due to go up during those levels, that's actually a supportive environment for the anti-fiats, and it could point to, again, a longer period of dip back on the dollar, which is due, squeezing into a rising wedge. Supportive for generally crypto, but more so, I would say, Bitcoin, because of the store of value and that deflationary, the fear of where to put your money. You're going to get it hacked in a bank. It's devaluing. The interest rate, you're getting nothing. Tech stocks, they could collapse by 30%. They haven't even had a proper correction yet. They've been about 10% down at the moment. Who knows? They haven't even had a correction. You could buy them and you could ride the elevator 30, 40% down in a really bad case. Where do you put your money? So store of value, electronic version, Bitcoin is more attractive than some of the others. I wouldn't go into your most speculative alts right now. Not yet. This is not a broad bull market on optimism. This is a bit of a fear trade. That's why gold's gone up. War, cost of oil, commodity boom, store of value in a fiat devaluating environment with overpriced tech equities. Where do you put your money? Guess what? Commodity funds, gold, and potentially also Bitcoin over market cap 101 shitcoin on the alt cap index. So let Bitcoin lead and we'll see if the alts follow. Let Bitcoin lead and we'll see if the alts follow. Okay, if you want more and you want to hear a little bit more about how we could be at a key inflection point for the currencies and watch the data come in tomorrow, you will see it. Is it going to be more suggestion of inflationary, or is it going to be a slowing economy and going to keep the Fed from getting too aggressive on the rate change because the market's down, not so many jobs, earnings are lower? That could be even more supportive for Bitcoin, because that would mean the interest rates won't be coming as fast and the stimulus won't be taken away as quick, which means good for the anti-fiats. Gold up, silver up, Bitcoin up potentially, dollar down. Dollar potentially down, taking a break. Remember something else, macro, we are still dollar bulls. So the super time frame, one other key point, and the rest of this we'll take on in the traditional market session in tomorrow's live trading day, but I'll leave you with that. We are still dollar bulls on the macro. That is the monthly chart. Boom, like that. But we do expect at some point a little bit of a pullback. That is our scenario. A little bit of a dip down at some point. We roll over, we finish, and we dip down at some point before later going high. So for the case of 4 hourly and daily, what is happening over the next week, 2 weeks, and 3? We are close to a possible localized high. A bit of a rest might be due. Targets have been made on the euro USD to the downside. The euro is properly wetting its pants. They need to put a rug under it in some way or another to stop it from getting disorderly. You may just get some of the zip taken out of the dollar. That could point to a dull number tomorrow on the non-farm payroll data during our live trading session together. Come and see which one it is. Link is right here below. Thank you for checking in. What do you think is going to happen next on the dollar? We want to read your comments. We read all the comments, some of which we reply to. By the way, watch out for the dodgy reply guys that are always there with their bots. Do not engage them. But tell us what you think the dollar might do. Tell us if this is a potential bottoming for Bitcoin, and why have we not seen the big volume yet? Let's do a final and we'll finish on a a little bit of volume. We'll deep dive this so much more when we do our live session together. But why has Bitcoin not yet got the big volume? Why has it not yet got the big volume? Here we go. Bitcoin, here he comes. Volume indicator coming on. There you go. That's selling off, by the way, not too scary a volume. The push-ups bigger, but it is still, in terms of the bigger time frames, not particularly interesting. It's firmed up a tiny bit, but when you get the volume that was here, remember that falling wedge after making the head and shoulders target, look at the volume we experienced there. That's it right there. This is what's disappointed so far about this. Can you see the point that's being made? We'll discuss this and more tomorrow. Live trading day. Link in the comments. Thank you for coming in. Thank you for liking. Thank you for sharing. We appreciate it. And we'll be coming back at you with more crypto content and more views. Watch that FX markets. What's happening tomorrow with data could be important. If we contract, that could be supportive for Bitcoin. If dollar comes back down and gives the euro a bit of a rest, that could be supportive again, not only for Bitcoin, but also for gold. And you could even see oil may remain very high if the dollar starts losing some of its bite. Thanks for coming on. I'll see you next time. Bye for now.